Reddy, Managing Director of MTAR Tech, is joining us to talk more about numbers. Mr. Reddy, first quarter performance this time around actually was slightly on the lower side versus what the analyst community was actually expecting. This was on account of lower than expected volumes in clean energy segment and higher other expenses. How do you read the performance in your own way this time, and in this backdrop, how does rest of the year look?
We are right on track with our numbers, even with clean energy. It is spread over the 4 quarters. You cannot read the number just for 1 quarter. So the way we look at it is, including the margins, they will improve quarter-on-quarter basis. We had given a outlook of our revenue targets of 45 to 50% growth. We are right on track with that, which translates to about 830 to 860 crores as compared to 574 crores last year. And we had given EBITDA margins of 28% plus minus 100 basis points. We are right on track with that. And these margins and the revenue growth will improve quarter-on-quarter basis moving forward.
Okay, so that's good to hear that you're maintaining your revenue guidance of 45 to 50% growth, which works out around 150 crores, and the margins too will be held up. But I just wanted to scratch that point further when it comes to the margins, because last year we had seen number of around 28%. It fell down to 25% last quarter. Now it's down to 22%. Despite the weakness in the margins, what gives you the confidence to maintain this margin band?
We are going to maintain the margin guidance because the kind of revenue outlook we have given for the entire year, obviously there will be a reduction in various other expenses, as you said, in terms of percentage versus revenue, and also the employee benefit expenses, which we have already have everyone in place to achieve this kind of revenue growth. So moving forward, we'll definitely have improvement in the margins, and overall we'll average at the rate of 28% plus minus 100 basis points. We have no issue with that.
Mr. Reddy, what is your current order book position, and what's the outlook on the rest of the year? How confident are you winning more orders in the rest of the year, which will aid the order book growth?
So we have a closing order book of 1,078 crores as of June 30th. We received orders of about roughly about 50 crores this quarter. But we are expecting majority of the orders coming in the next 3 quarters. That's what normally happens, both in clean energy, nuclear, and other segments, close to about 1,200 crores. We should end up with a closing order book of 1,500 crores, as I mentioned earlier.
Okay, so the closing order book could be around 1,500 crores. That's what you're talking about. But, there is a lot of opportunity when it comes to the hydro and wind power segment, the clean energy bit that you talked about. What kind of growth are you expecting from these 2 particular verticals?
We are having a lot of improvements in that. We have done a lot of first articles, and we are getting a lot of orders right now. That's what you can see, clean energy segment moving to a level of close to about 580 to 590 crores this year, which includes even the hydro and the wind sector as well. So we are right on track in terms of what we need to do in terms of the other segments in the clean energy, which we are working on it. And we also commissioned the main plant near the airport, which is right on track right now in terms of execution of various orders, what we're receiving from different companies like GE, Andrix, Voith, etc.
How has the export environment been for your company, and are you in talks with other global OEMs as well for incremental work?
Yes, we are in talk with various OEMs. We'll obviously update the investors as and when it happens. We are discussing not only in clean energy segment, but also in the defense segment as well. And once that happens, obviously, these are the growth drivers for over the next 2-3 years, and which we are working on it right now, and it's looking very positive at this point of time.
Okay, Mr. Reddy, on that note, we'll let you go. Appreciate you making time for ET now, but time now to slip into a very short break. Don't go anywhere.